know, most cities and areas have a lot of shitty bands, but we have a lot of great bands, so we're very lucky. So you should appreciate that. Have you ever been to Tulsa?
All right, I think I'm live here now. So let's see if this works. All right, so we're practicing, my friends. We're practicing. Hey, Bruce, what's going on? What's going on, Bruce? So we're practicing. I just want to see if I can get this screen share thing to work. Hey, all right. Share. It's showing.
So hey. I drove 40 miles from Silver Spring.
Bruce, can you see this? Can you see a spreadsheet? Tell me if you guys can see the spreadsheet. Hey, you can see, hey. All right, so I'm gonna do this website. This is a Wall Street Journal. Give me a thumbs up if you see the Wall Street Journal. Oh, I was just listening to some Clutch, Angelo. All right, sweet. It looks like it works. Yay. Just listening to some Clutch Animal Farm, Orlando. So I was reading a book on some guy. I'll tell you what it is. This guy's name is, who is this guy? Paul. What's this guy's name? Paul Tremblay is I guess a horror writer guy, and I was looking forward to reading it. And he has the lyric from the Clutch from Maryland Animal Farm, and he got the lyrics messed up. That drives me crazy. I'm a sucker for getting the lyrics correct. All right, so I'm going to click on Spreadsheets, and I want to make, if I can't make this smaller, hold on just a second. I made it bigger. I don't want it bigger. I want it smaller. Oops, there we go. And I want to go like that. And I want to go like this. I want to go like that. And then I want to bring up this right here. If I could, oh yeah, look at that. Hey, Tina. Okay, all right, sweet. All right, so can you also, okay, cool. So how do I pop the chat out? Pop out chat. There we go. Appreciate you hanging in there with me, folks. We're going to pop out the, oh, sweet. I think I got it. Oh, man. Old Josh. Old Josh. Is he showing up some skills here? All right. All right. I see myself. I see the chat. Very blurry, says Thomas. Huh. What's very blurry, Thomas? I got a Wall Street Journal article up. Is that what's very blurry? I wonder if anyone still there? Okay, cool. All right, and so now you can see the spreadsheet. Yay. Yes. All right, so now I'm going to try share whiteboard. Oops. Say Tom Brady. You all see it says Tom Brady. Well, that's fantastic. Okay, cool, man. The goat is right. All right, sweet. Yay, it works. All right, so I'm just text. Ooh. All right, cool. That's good. We got eraser. All right. Spotlight. All right. Stamp. All right. Draw. All right. Okay. All right. Cool. All we really want to see is Pablo. Come here, buddy. Everyone's looking for you. Come here. Come here. Good boy. Good boy. Oh, yeah. Oh, yeah. There he is, John. All the way from Georgia to Oregon. There he is. Hey, Pablo. All right. Cool. All right. That's good. So we're going to try share. Okay. That looks good. All right. I think I got it. Oops. Oh, wait. Stop that share. Oops. Ah. Good boy, Pablo. All right, so we're going to click on here. And then what we do. All right, sweet. All right, cool, man. Yay. We got it, Pablo. Give me a kiss. Like this. How do I get back to that? There we go. Right, so I think what we do, Pablo, is we go like that. There we go. Nah, I just I couldn't do that before today. Spectator. Yeah, YouTube had a screen share thing, and then they got rid of it. It's actually, I follow this guy named Miles Beckler on. He's kind of like my mentor. He doesn't know me. I love Miles. And if you're interested in doing YouTube stuff, Miles Beckler is the where to go. MilesBeckler.com. There you go. Anyway, so long story short, I've never able to figure out very easily how to share my screen on the live streams on YouTube, and because that is always a pain. I just couldn't figure it out. So I did a couple times, and it was okay, but it's just always a hassle. Anyway, long story short, YouTube got rid of their Hangouts, Google Hangouts, and so you couldn't do a live stream with a screen share anymore. It's stupid. And I've been using this thing called Uber Conference for dealing with clients in terms of screen sharing, when I'm running their plans. But everyone else uses Zoom, like what's her name? Danielle Roberts. When she and I talk, we just use her screen share for Zoom, and it just is good. I said I'd never really wanted to pay money for it because I'm cheap, man. If I get stuff for free, I'll do it. But Zoom, you can sign up for free, and then if you pay, I think it's like $12 a month, you get some benefit. And then for screen share, it's $33 a month. So it's all right for roughly $550 a year for their webinar, doing this plus screen share, plus whatever else they offer. I'll do it because I want to start doing a little bit more live streams with a screen share where we're doing like with Right Capital stuff. Because one of the things I want to start doing is sharing some video on Right Capital because there's a lot of questions on that. More and more people are getting into the software, and I just think it'd be helpful for that too. As well as hey Jerry, you should watch Miles Beckler, by the way, Jerry, because he's good at that stuff. But anyway, Right Capital, and just like articles like this from the Wall Street Journal that came out the other day, and which I'll talk about here in just a second. But anyway, so I haven't been able to do it. Oh, okay there, buddy. Now he's walking all over my computer. Hey, thanks, buddy. Now I just turned it off. Appreciate that. Pablo will be getting his own channel soon. Exactly. Is this a computer class? Says Deb. Just learning Zoom technologies, which I like a lot. So I'll start using this a lot. So if you're doing, again, YouTube live streaming and whatnot, it's $550 for all this. It seems like a pretty good deal for me. And then, because it's a business expense, it just comes out of the top line revenue. All right. So, well, just while we're here, first, I just wanted to show you this right here. This is from Gretchen Morgensen, and for some reason I can't get the whole article. I was able to read it before. I don't pay. I literally, it's funny. I literally don't subscribe to Wall Street Journal anymore. I really don't pay that much mind to much of this stuff anymore. I mean, I read a couple guys, Nick Murray from nickmurrayinteractive.com. I pay for him. He's $350 a year. I get all kinds of trade rags sent to me for free. Every now and again, I'll come across an article in the Wall Street Journal, but I don't pay much mind to it. But I thought this was kind of funny. UBS faces client backlash over option strategy. And I wish I could see this whole article. I have it on this other side right here. Watch out, bud. Watch out. Thank you. Thank you. Hold on a sec. There we go. Oh, that buddy. You keep walking my computer. But oh boy. What are you doing? Anyway, so I had a guy send me not too long ago. I wish I could show you this whole article. Maybe I'll try on a different computer. I'm using VoIP right now, Bruce. Yeah. I actually, when I'm doing my planning for people, I just have them call me because simply because the VoIP is always a little bit of a delay, and then with the right capital, it just makes it more of a delay. So they'll call me on the cell phone, and then we'll use a screen share. It seemed to work fine, to be perfectly honest with you. Anyway, so this, I just want to briefly talk about this right here. I could not help but laugh. This is an article I found through Nick Murray Interactive. Actually, while we're at it, let me just go to Nick Murray Interactive. Let's see here. So I'm going to stop share. I'm going to try this stop sharing right here. So we're going to, oops. Hold on a second. We're going to, how do I stop sharing? I got to bring this up a little bit. Share. Okay. I'm not sure if I'm sharing or not right now. Hold on a second. Let me go to Nick. All right. So I want to, oops. No, yeah, everyone's asking. I don't understand. I haven't disconnected Right Capital Hall. This is like the fourth time people have asked me that in the last 24 hours. I thought I didn't think I could be any clearer on that, actually. I just said I might stop not allowing new people to buy into it by the end of the year, because I was getting a lot of emails about how do I do this, how do I do that? And I just never wanted to be in tech support, which is one of the reasons I don't offer my spreadsheets available too. Because I tell you, there's always gonna be people that say, hey, how about this, how about that, how about that? And I don't want to be in tech support, not at all. But so a guy named Scott is developing a Google Groups for Right Capital, not through Right Capital per se. It's not their blessing, but he said, hey, you ever thought about doing a Google Groups? I said, no, but man, by all means do it. And he's got it set up. And I don't think he's quite giving me permission to share it with everybody yet. I think he's still working on it. But it's going to be friggin' awesome. It's going to have FAQ. It's just going to be a running thing of what people have questions on Right Capital. Is fantastic. So once, I think I'll probably be able to get that for you all today, as a matter of fact. If he allows me, I don't know if he's ready to rock and roll on that, but he's going to design a Google Groups, just kind of like an interactive page for Right Capital users. What was I going to say on the, so Right Capital, yeah, Right Capital is just, I couldn't find a working link. Yeah, I don't have a link to it through my website. People who have bought access through me, I just send them the link, and then they go on their greater way. I mean, that's all there is to it. So they go and they use it to their heart's content. And I'm telling you, I could not be clear. I do not want to be in the business of tech support. And if I find I'm getting that, I'm getting out, because it's not, I can't stand that. I was at tech support at one of the things I went to when I was at Vanguard is when Vanguard's website first rolled out. I got out of their individual investment division and into tech support. I did that for about 3 months, and I wanted to kill myself. I hated it. That was when they were first doing the encryption websites. That was in 1999. Before that, there was basically no website. And so back then, 128 encryption was 120, 126 was big. And long story short, I could not stand doing that. So that's why I wanted to get back in this side of things, working with clients. But that's another reason I don't offer my my emails or my spreadsheets available too, because I did initially, and people say, "Hey, how about this?" I don't want anything to do with that. Just it bores me, and I get frustrated because it takes me off what I like doing. So, at the risk of sounding pissy, I still love Right Capital. I had a guy today email me, said, "Hey, would you have any alternatives to Right Capital?" I said, "No, I use Right Capital. Right Capital is absolutely fundamentally superior than anything else that's out there. The closest thing would be eMoney, which Fidelity owns, but eMoney is freaking, it ain't cheap, that's for sure." Can you all see this where it says Nick Murray Interactive? It looks like you can, but if you give me a thumbs up, do you see where it says Nick Murray Interactive? I'd appreciate that. No, okay, good. So I got it. Why can't it? All right. Oh, there we go. All right, cool. All right, so now, all right, cool. Now can you see Nick Murray Interactive? Hey, Ben. Doug just retired at Texas Penn. Yes, all right, sweet. All right, so one of the things I do is okay, sweet, I see what I did. This is, if you guys are interested in just not basic, some of the most quality investment stuff, I'd go to Nick Murray Interactive. I get a lot of my stuff from this guy. A huge fan of Nick Murray. Just now, he is a bull, and not bull on stocks versus bonds because he thinks stocks are on the low. It's just he just believes in the equity investing. That's all there is to it. He believes in equities over bonds, and he's believed that for many, many years. So just be advised, this is not going to be for folks who are negative Nellies or conspiracy theorists or whatnot. Nick Murray's on the, and he does. He doesn't. He's a little bit more political than maybe some would. He's not as political as me, but he's definitely leans towards my side of capitalism, pro-capitalism, pro-freedom and whatnot. He doesn't let it as much as I do, but definitely you can read. He loves capitalism. He loves entrepreneurship. He loves equity investing because of what equity investing has done for the vast majority of middle-class America, which I do too. I don't follow it hook, line, and sinker though, in terms of what his strategy is. He has a lot more equities than I would ever recommend for someone in retirement. But at the end of the day, just a plethora of just wonderful, wonderful resources. I get so many books from this guy. I'm reading one right now. I forgot what it was from Nick Murray Interactive. Anyway. You should definitely get a subscription to this guy, even if you're not a financial advisor. The funny thing is this is for financial advisors. He has a Q&A thing from financial advisors, and you can see what the financial advisors' questions are that they're dealing with in terms of clients. And it's very, very interesting. I find it interesting as a professional financial advisor, but even if you're not a financial advisor, you still get a good taste of what's going on in the overall realm of the professionalism. I could not recommend this guy further. Let's go to First Trust Portfolios. First Trust, yeah, right there. We go here. So just as while I'm yapping here, because I can just share my screen. My man Brian Westbury, First Trust Economic Blog. The producer price index declined 0.3%, and the reason why was right here. 7.2% decline in Sergio in gas prices. Energy prices dropped 2.5%. And my perpetual negative Nelly, Fred, who said, "That's BS." Basically, that's a lie. Who also said I was a commie. I laughed. Is because I supported something from the left, and because I supported something from the left, I'm a commie. I should run with Elizabeth Warren, which I chuckled at, but I just laughed because he said this is a lie. The energy prices did not drop 2.5%, but I mean, at some point you gotta. I mean, I don't know. At the end of the day, if you think. If everything is a lie, then believe nothing. I get that, but I just found it funny because we have gasoline prices down 7.2% in September, which I thought was great. But mostly, I just find this to be fantastic, 2.5%. So I use actually someone. Nick Murray. Hold on a second. Political. Hold on a second. I'm going to unshare for a second. All right, I'm gonna go here. Oh yeah, see, I appreciate y'all being here. I'm trying to learn this at the same time. This is great. Oh man, I'm gonna show you this other website I love that I got from Nick Murray. There we go. right here. We're gonna hit share. Oh, dude, this is gonna be great. My live stream is gonna be so much better now that I can I can share my screen. I love it. So you all should be able to see political calculations. I love this website. Love it. It's just so much stuff in here, man. This place is freaking insanely awesome. I don't even know who does this, but whoever does this website is just some guy named Iron Man, and it's just fantastic. Definitely subscribe to politicalcalculations.com. U.S. recession begins to recede, and I love this guy. Now, I will tell you, it's funny. This guy talked about surprising surge in U.S. exports to China. I thought was interesting. New home sales continue strong rebound. Bernie, Texas, in the house. Just talked to a lady this morning who lived in Bernie for a couple years. S&P 500 at your fingertips. Watch this. This is great. Is it working? Hold on a sec. There we go. Just all kind. Look at that. You can. So, man. I wanted to show you something here though, because they have a thing on here on science, fake science. Yeah, okay, whatever. I don't know where it's at. But anyway, they had a thing on there about fake science, which I liked quite a bit. Because they threw in with the anti-vaxxers are fake science. And I just watched the most recent South Park episode, and they were kind of somewhat thrown in with the anti-vaxxers. To crack me up because I say the idea, and they're using CDC. Who else are saying the UNICEF? All these people, and my uncle worked for UNICEF for many, many years about the proof of vaccines, and I say we don't ever challenge vaccines are in of itself not right or wrong. I would challenge the idea that the 18 or 19 prescribed vaccines and just boom that they prick you are okay for infants. We don't have any evidence of that from the CDC, and I just find it funny that even South Park is saying the CDC says it's safe. Where does it say that? It says it does not say those 18 and 19 vaccines given one after the other to infants up to 18 months are safe. There's no evidence of that. And so the South Park, these guys fall for it too, because apparently to be questioning vaccines make you a man of the left. And it just cracks me up because I'm like, no, I don't want the government to tell me what I have to put in my body. It's just funny. As in the South Park episode shows you, because they say you can't come to school if you're not vaccinated. I laughed at that. All right, so let's see what we got, because the evidence is so overwhelming in favor of vaccines. I say, well, it's actually not. Just because you say it is doesn't mean it's true. All right, so let's see what we got. Carl and Jeff left for work. Life is good, says Doug, as he's sitting there in the panhandle of Texas enjoying his cup of Joe. Do I think the COLA will be 1.6 or higher? I think it's be lower, man, without question. The boss is right here. Whee! It's Pablo. In fact, he's good for my PT. Watch this. Oh yeah. Oh yeah. Whee! I don't know if flu shots are safe or not, Jill. I don't take them. My wife gets mad, but I don't know. And I don't know if they're safe or not. I don't know. I just know at the end of the day, I mean, flu shots, I don't know. I frankly don't care that much. And to be perfectly honest with you, I don't care that much about the vaccine. I love to stick it to the people who say science is on our side. We have all the science, when they absolutely don't. They don't have it, and they act like they do. And just because the CDC says something, well, hell, what has the government never been wrong on stuff? It's funny. We're just going back to the nutrition science. Never mind what they're doing with climate change. It's all, I'm not even saying conspiracy. It's just a matter of what gets in the realm of the vernacular that comes from the government, thus means it must be okay. And thus, you damn well better get your vaccines or else you're not going to school. Scares me. I mean, hell, we don't have any evidence of the government doing things wrong to people. No. Yeah, I don't think it's going to be 1.6% for COLA. Not with energy prices going way down. I know they get rid of energy and what is it? They don't take account energy and is it food and energy because they're more volatile. I just don't think that is going to be 1.6. I think it'll probably be 0.5% for a cost of living adjustment for Social Security. We shall see. All right, we got. Yeah, offers spreadsheets as is. They are great, but It never works like that, my friend. And you know who I'm talking to. It never works like that. They always say, just give me the spreadsheet, I'll figure it out. Nope, never does. That's why I got frustrated with the right cap. I'm like, look, I cannot be any clearer. I don't want to be involved in, what if I do this? What if I do that? And I still get all these emails, but I'm just like, I can't. It actually frustrates me, I'm not going to lie to you. Initially, I offered those spreadsheets and someone said, hey, and I just said, I can't do it. I had a nice lady, and I haven't seen her around for a long time, so I must have pissed her off with my libertarian viewpoint. I don't know, but anyway, she was a nice lady, and she did a bunch of wonderful spreadsheets for me. And I got a guy who's working on some too. And I said, look, if you all want to do them and they're good and they're intuitive, I'm happy to tell people about them and send them to your website, and maybe you can sell them for $25 a pop. I don't know. I don't need a commission. I don't need anything. I just don't want anything to do with it, frankly. But if someone's willing to design a website, a spreadsheet that's good to use, it's easy to use. What I mean is intuitive, and I can figure it out pretty quickly, I'm absolutely happy to use it and offer that to people via your own spreadsheet, platform, website, something like that. I mean, I don't mind. I have a guy right now, my man Joseph, who's done some spreadsheets for me that will probably be offered at some point in the future. Daniel too. It's just the issue is I can't. Some of the spreadsheets, someone said yesterday about the logic behind the spreadsheets, or maybe it was Sunday, I forgot. But when you're offering other people's spreadsheets, you don't know the logic behind it is where it throws you for a loop. And if I can't figure out the logic pretty quickly, I just don't want to dive into that, which is too bad, because some of those spreadsheets are freaking awesome. But for me to create my own spreadsheets is in a logical, it's very black and white, very elementary. But for me, it's logical. This, then that, then this. It's not ever going to be too fancy Nancy. But some of these guys and ladies create freaking spreadsheets, and it's insane how well they do them. And but the problem is, it doesn't logically fit. So it takes some time to think about it. And if I have to think about it, and I have a natural interest in this stuff, then other people are gonna have to think about it. That means other people are gonna have questions, and I don't want to answer those questions. But if someone wants to design a spreadsheet and they want to put it on their website, I mean, I'm happy to refer people to that, because I get that question all the time. How about spreadsheets? Yeah, John said did the tech support gig. Yep. Drove me bonkers too. Yeah, no, I got Al. Zoom's got some seminars. I've looked at Zoom quite a bit. Trust me, I did a lot of Zoom reading. I was probably sitting here for three weeks before I finally just pulled the trigger and bought it. And then I was going to do this live stream anyway. And I said, well, hell, might as well kill two birds with one stone, do this live stream just to figure it out, which I think I have now. It's all trial and error, man. I mean, that's the thing. It's all trial and error. You figure it out and you don't, and screw up, and people, I don't care. Anyway, can you explain a company-sponsored 401k plan, Rule 55? Yeah, John. So John in Long Beach, all that means is if you're in a 401k and you separate from that plan after the age of 54, you can have access to that money as long as it remains in a 401k without the 10% penalty, if that makes sense. You can't have access to it if you separate before 55. You can't have access to it if you roll it to an IRA, even after separating from 55. It has to remain in that company employer-sponsored plan, and you have had to separate from service after the age of 54. You still got to pay income tax. You just don't have to pay the 10% penalty. Pablo's getting his own channel. All we really want to see is Pablo. Thanks. Dollar Tree wardrobe. Yeah, man. All right. So, hey, I was going to actually hold on just a sec. Larry, first time here. Right on, Larry. Thanks for coming. Hold on just a second. I think I might have a question that someone asked me earlier today that I can answer while we're on the thing here. Okay. All right. So someone asked me a question today of how I should draw down my money. I know I should leave the Roth alone, but should I use non-retirement money first or IRA money first? And my man will know who I'm talking to. You want to use your IRA money first. Absolutely. In fact, I was working with a couple today in Virginia, and the issue is, and it's funny, I was telling them, because they got no debt. They got about $500,000 of liquid assets, no debt whatsoever. They're going to move to Florida, And, you know, hey, buddy, give me a kiss. And they're going to be fine because their spending is so low. And like my man here said yesterday, he goes, when you don't have any debt, you don't need much. And this, I can't stress enough. So in this guy's case, or these two couples' case, they're literally going to have no taxes from 65 until they're about 75. And then the taxes are going to start ramping up when they have to start, you know, their RMDs start getting a bigger above and beyond their standard deduction. So between 65 for them when they're going to retire and 70 before they take Social Security, they should be taking out money from their IRA. So my man who asked that in Kentucky, if you know who I'm talking about, you want to take your money from your IRA first. You really want to reduce that money as much as you possibly can. Get that sucker down. That way it won't come back and bite in the bud later on down the road for sure. What's the difference between ordinary dividends and qualified dividends? So my man Robert from Massachusetts says qualified dividends are just essentially domestic stocks. You know, I always use GE, probably Apple, I guess, is a better one now because they do have a dividend. It's a dividend from a stock, a typical dividend from a stock, you know, a bank. Just what your normal ordinary dividends probably be special dividends that they pay. I can't remember if REITs, Real Estate Investment Trust, are ordinary dividends, or I think they are, but don't quote me on that. Preferred stocks are qualified dividends, believe it or not. So preferred stocks are qualified dividends, which is pretty sweet. I'm a big fan of preferred stocks. PFF, I'm a big fan of. You're not going to get growth in there, but you get a decent yield that's trading at the yield is not ordinary income like a bond. It's qualified, which means it's a whole lot more tax efficient. Ordinary dividends are just capital income, just like bonds essentially. So I'm a big fan of qualified dividends. Basically, any stock that you have in the U.S. can be qualified for sure, for the most part. Plymouth, Mass, that's right. Do I offer fiduciary advice? Yeah, but I frankly, I could care less about the fiduciary name tag. Everyone gets caught up in that. I just don't care. And I say this a million times a Sunday, I'd rather pay some guy, as long as he knows what the hell he's doing, at Ed Jones, 2.5% front end commission than a 1.5% annual fee. I don't care if the guy's a fiduciary and the Ed Jones guy is a commission salesman. I'd much rather pay the front end charge than an annual fee, even if the other guy's a fiduciary. So yeah. My fees are on my website. Just go to heritagewealthplanning.com/fees. Ooh, that is some stinky breath. Woohoo! Man, that's some stinky. Oh yeah. Don't tell my wife, but I gave Pablo some bacon grease yesterday. No, big mistake. Big mistake. Don't give your dog bacon grease. He puked everywhere. And I even offered him a piece of bacon and he didn't take it. I said, there's something wrong with this kid. And sure enough, everywhere on the carpet, puking all over the place. I said, oh boy. So don't give your dog bacon grease. That's all I got to say about that. John says, be careful about, right on Starling, be careful about Part B and Part D, IRMA, when pulling funds from an IRA and moving to a Roth. Yeah, I agree with that. So that is a good point, though, John. The drawback about taking money from an IRA first as opposed to taken from a taxable account is it will be taxed as ordinary income from the very first penny you take out, which will add to your IG or your MAGA, your modified adjusted gross income. And once you're above a certain threshold, you could have Medicare Part B and Part D premium increases under the IRMA. The income was related to Medicare annual adjustment or something like that. The drawback is there's no getting away from that anyway. I mean, later on down the road, you're going to have to deal with that with RMDs anyhow. So there's no getting around IRMAs at all. So you might as well take it now before you're taking Social Security, in my opinion. But I'll let you decide that. Worcester, as we say up here, that's a Boston Rob. I don't think Rob is a Boston Rob. Nope, I've never heard of the Boston Rob. Yeah, I've heard of Boston Rob from a band up there. From Blood for Blood, if you remember Boston hardcore music, that was one of my favorite bands of all time. I'm not sure if he's still alive, actually, because he had a hard time dealing with heroin, that's for sure, which is sad, man. When are they going to add Smell-O-Rama to Zoom? Exactly, the real world Smell-O-Rama. I did pour the grease on the dry dog food, man. That's what I did. I poured grease on it. I might have poured too much, though. And he, yeah. That's man, I poured the bacon grease on the dry dog food and he chomped that down like you would believe. And about a half hour later, it all came up. Oh yeah. If you take distributions from 401k for a year before taking Social Security, does it count as count? No, it does not, Al. So the only thing that counts is for your 35 years is paying the FICA tax. I mean, literally, if you don't pay the FICA tax, it doesn't count. So ordinary income or W-2 income, 1099 income, yep. Everything else, nope, you don't pay FICA on it. All right, so I want to go back to this article for the Wall Street Journal, but UBS faces client strategy over options, a backlash over option strategy. A complex investment strategy pitched as a low risk by stock brokers at UBS has triggered a backlash from clients of its securities unit. It's called the yield enhancement strategy, and it generated at least 60 million in losses for its clients. It involved the use of several option trades and borrowing, according to market materials. Basically, what they're doing is they're buying options on currencies and on indexes and selling options on those same currencies and indexes. And the funny thing was, I had a guy probably 3 or 4 months ago who sent me a brochure on an FDIC insured account, which was FDIC. I get you, and this was not. It was I'm drawing a blank what they called a syndicate account, which means it just comes directly from the bank, essentially the bank. And I don't want to say we argued about it, but we just debated about the legitimacy of it. And the whole point was, he's saying they're buying and selling options on various currencies. Anytime they're buying and selling options on various currencies and they're offering it as if it's safe, you freaking stay away from that, man. And anyway, the whole thing with UBS, in this case, they had 5 to 6 billion in assets, and then they lost tons of money for their clients. And one lady, she put $3 million in there, and she's like a widow, and she got hammered. And now she's has an arbitration clause against her stockbroker because she was not made aware of the risk. In fact, UPS says it was a low risk strategy. Of course, can she prove that? I don't know, but she says her broker said, this is what this lady said. Her broker, a guy named Robert Perlman, and I don't know if this is true or not. I'm just going off what she said probably just ruined it. If the world ends, you'll be the only one left with money, is what the broker said to her. And I just, he got paid, 5% commission, whatever. I don't know. But anyway, so I'm sitting there thinking, you got to be careful with these guys, because if they say it's low risk and you ask, why is it low risk? And they say, because they're buying options, selling options. There's no such thing as low risk there. Now, I will tell you, selling covered calls against your portfolio is lower risk than actually owning the stock outright. I know that for a fact. And that's called a buy, B-U-Y, right strategy, W-R-I. Ooh, let me practice sharing. That's called buy. Ooh, yeah, here we go. Oh, sweet. Hold on a second, buddy. You are loving me, and I appreciate that, but you are let's erase all this stuff. Clear. Oh, clear. There we go. So I'm going to show you buy right. Oh, that's fantastic. Oh, I love being able to do this. This is freaking awesome. That means you're selling covered calls against your shares that you already own. And inherently that reduces your risk without question, because it's pumping up your income. But if it reduces your risk, it inherently means you're reducing your upside as well. So a buy right strategy, a covered call strategy, they're the same thing. Essentially what a buy right strategy is, you're going to buy 100 shares of Apple. You're going to sell out of the strike a call 6 months, 8 months, leap a year to year and a half. And you're going to gain a little of income while you're waiting for that option to either expire worthless or your shares will be taken away from you. That is the one area of buying an option, or selling, in this case, selling an option. You're writing a covered call that you can reduce the risk of your portfolio. If they're buying, especially if they're doing naked calls, you can't, it's not reducing risk. It's just not. So if you have a strategy and it seems like it's low risk because of all the different option trades, run for the hills. I'm telling you right now. Let's see. Dennis says, with only 200,000 of TSP, is it worth it to do Roth conversions? I'm 60 and retiring, and then planning on draining from the thrift until yeah, probably not, Dennis. No, spot on, dude. The point is with the TSP or any kind of qualified account is by the time you hit RMDs, we want that sucker to be down to 0. So on RMDs is synonymous in this case with taking Social Security as well, if that makes sense. So we're doing it at the same time. Okay. So we're taking Social Security at 70. We're taking RMDs at 70. Ideally, we have no RMDs because we've dropped our TSP down to 0 by the time 70 rolls around, either through Roth conversions or through just distributions where you're living off it until you take Social Security. So no, I don't think Roth conversions make sense at all in that regard. Now, I don't know your whole circumstance, but I think you're hitting on the head what you're thinking about. You're thinking spot on, man. Yeah. All right, John's going for a morning walk. What? Rude, dude. Rude. You gotta take Pablo with you. Scott, you may want to check your contact page on your website regarding the other option on the connect page. I think you have that's all I see. I think you have a big, I don't know what it says. You may want to check your contact page on your website regarding the other option on the connect page. I sent you an email about, I think you have and I just see big, so I'm not sure what exactly he says there. So I'll send that to my man, David Simon, over in Pennsylvania, who is my website developer. See if I had something. Oh, I want to share something else just while I got to share. A bug. Okay, gotcha. Right on. Was that because you sent me something, Scott? Or I guess your name, I don't know, Sean, whatever your name is, S. Chandler. Scott Chandler used to be the tight end for the Buffalo Bills. And when you sent me something, it didn't, I didn't get the verbiage on that because I've had that a number of times on the other thing where people just click other, but I don't read anything. If that makes sense. So they're like no verbiage comes through. Is that what you noticed? Because if that is, that's a big bug. I actually had a friend of mine from when I was in the Army reach out to me via that the other day. I emailed him back and I said, hey, is this guy, he was in the Army from 88 to 92. I said, yep. So is this a guy I went to the Gator Bowl in 1991 with, or 92? We saw Alabama play UNC. He was, I vaguely remember, okay. All right. Oh, sweet. That's exactly what I want to hear. Good. Thanks, man. Hey, Charles. Anyway, he said he vaguely remembered because we got drunk as skunks. Actually, it's funny, man, because I'm from Maine, so we're in some way country boys for sure. But we went down there to visit him and his friends, and we went mud bogging, shining deer. You ever done that? You take this big spotlight, you go out in the middle of the freaking swamps, and you shine deer, get drunk as a skunk with a monk. Oh, it was. It was man. I had so much fun down there. I said, "Oh, this is the life for me." And I just, and I'll never forget. I was jogging one time, and he was in St. Augustine, and I was jogging, and all these people are waving to me. I was like, "What the hell is going on? Do I got snots coming down my nose or something like that?" So I went back and said, "Kevin, all these people keep waving to me while I'm jogging. What's going on?" He goes, "That's how we live in the South, man. That's how we live." I said, "Oh, okay." Because I didn't wave back to him. I gave him all dirty looks. He goes, "Oh, great. Now my neighbor's going to think you're a crazy man." But it's funny. We had man, I tell you, the life of a redneck's the life for me right there. And you can be black. You can be white. You can be Spanish. Everyone's a redneck if you like to drink beer and hang out and just be with your friends. That's a good lifestyle, man. It's not based on skin color. It's based on just hanging out with the fellas and enjoying life. That's for sure. I said, this is life for me. All right. Got to go appointments. All right. So Bob says, no advice for single retirees and RMDs, just suck it up and suffer the taxes. Huh? I don't understand why you say that, but okay. Text, okay. I think you have to adjust your COLA future increases downward on some of your scenarios. Rob, I'm just doing that based on the trustees report. In fact, maybe one of these days I'll bust out the trustees report and read that to you, because the trustees report is actually very, very explicit in what it says. Over the next 75 years, they expect a 2.6 COLA. And if you're not going to do that, you'd have to justify why are you not going to do that in something else. Now, remember the trustees report, there are 3 scenarios. There's a good, medium, intermediate, and ugly, essentially. And ugly is for unemployment rates. And unemployment rates on ugly is 6.5. It's for 75-year projection. Intermediate unemployment is 5.5. Good unemployment is 4.5. You know what unemployment is right now and has been for a number of years? 3.5. So the trustees report of the three, the third one is the middle. That is what they say that they expect a 2.6 cost of living adjustment from now 75 years out. So in any given year, it's not going to be 2.6, but I'm going with the trustees report, as I do with the CMS, the Center for Medicaid and Medicare Services, which they say at the end of the day, they're expecting a 5% increase. So I would argue that you have to seem like you have, yeah, I mean, you got to, but I agree with what you're saying, Rob. I mean, the short term is not 2.6, but what else are you going to use? I mean, at that stage, you have to have a justification that you're going to use something smaller. And the justification might be that we're not going to be 2.6, but then that's your synopsis, which may be correct. But then, see what I'm saying? Then anyone could do anything they want. That concerns me when people start throwing numbers out there based on their guts or based on their intuition. I don't like that. I don't like that because I say, well, what's the basis for that? And that's why I always say too, when I'm using my right capital, I give a 7.5% rate of return for stocks. And that's not based on just me. That's based on Bogle, RIP, Schiller from Yale, and Siegel from Wharton, where they're saying earnings growth plus dividend yield year over year, we're expecting about a 7 to 7.5 to 8% rate of return on stocks over the next 10 years. I just extrapolate that for the next 30 years, essentially, or essentially for the rest of the life, because I think that's right. I think earnings growth plus year over year, you're going to get about 7.5, 5.5% earnings growth, 2% dividend yield, 5% earnings growth, or 2.5% dividend yield. That makes sense to me for stocks. When Dave Ramsey and others say they're thinking 10, 11, I say, where's the I'd like to know the justification, how you're getting that. You know, what's the mathematics between how you're getting a 10% rate of return? If it's based on historical, I said and the blog post I just put out there today, I showed you the historical stuff is completely irrelevant. Going back to 1871, that's fine, but was no ICE back then. All right, that's before the telephone. Never mind the internet. So we didn't have internal combustion engine where people are using. We didn't have electricity. I don't even think we had plumbing at that point. We certainly didn't have electricity. So I mean, we're using numbers on a whole different area to extrapolate going forward, and you shouldn't do that. You should say, what do you expect the market to give you for rates of return going forward? And it has nothing really to do with the past. It has to do with what's going to happen in the future. And that's why I give 3% to bonds, which I might drop that down a little bit because the corporate bonds are averaging about 2.5 now, I think, high yield corporate bonds. And the 10-year treasury is at 1.6. I don't expect that going up anytime soon. So I would suggest that you have to have a justification. Where your rate of returns are coming from? If the justification is based on numbers that are that's what I've done in the past, that's not good enough for me. Not. And always I err on the side of caution too. I always want to say, look, if we're wrong here and it does better for us, well, that's just icing on the cake. But I don't want to be wrong onto the upside. Let's just put it that way. But I get what you're saying, Rob, about the 2.6. Had another guy, actually, I'm going to draw, I'm just going to do it here. You okay there, big man? A guy emailed me today. It was a good question. He said, if earnings growth plus dividend yield equals return. So earnings growth plus dividend yield equals annual return on stocks. How can you, how do you explain a 2008 when the markets fell? Well, that's simple because that's what happened was the earnings growth dropped off a cliff, but similar to cost of living adjustments and whatnot. I said I was going to go Wednesday, but I was crazy busy yesterday. So Wednesdays will be my time. It's just, I wanted to practice on, I didn't expect to go this long, to be honest with you, till that. I was trying my new software here, Zoom, and it works like a charm. So it'll be going back to Wednesdays for sure. I just wanted to see if I could get this working today. But anyway, any given year earnings growth plus a dividend yield is not going to say, okay, the earnings growth in 1989 was this and the dividend yield was that, thus I get that. It's just based on historical record. If you look historically, what made the stock returns is earnings growth plus dividend yields. And it is literally such the amount of, what's the word I'm looking for, closeness on that in terms of the big picture, long-term investment is spot on, man. If you look historically, earnings growth plus dividend yield, that has literally been is about as close as a way you can predict future performance. Now, in any given year, you're going to have appreciation or depreciation. And what that means is PE ratios. So you're going to have PE ratios rising relative to earnings growth. And that's just people's willingness to pay more for a dollar of earnings. That's what we had in 2000. We had, 48 was the S&P 500 price to earnings ratio. Yeah, but that is just based on, that's a temporary thing. We don't have any idea what the PE ratios are going to be. None, because you don't know what people are going to be wanting to pay for stocks. In 1982, the PE ratio is 8. So you have earnings growth plus dividend yield, but sometimes you can have a third thing in there, which will say appreciation or depreciation, depending on what the people are willing to pay for a dollar of earnings. I hope that makes sense. So you just look at 82, an 8 PE, and we projected to go on a strong run as the price of earnings got to more market-based average, about 15. 2000, we had a 48 PE, and then it just fell simply because it was trading too high. But in the long run, I'm talking the life cycle of a retirement plan, earnings growth plus dividend yield gives a wonderful way to project what you think your stock returns are going to be. And if you think the price to earnings ratio is going to increase relative to earnings growth, that means you're expecting more people to be willing to pay higher amounts of money for that same level of earnings. And I don't think you shouldn't bank on that at all, because that's literally the greater fool theory. You're saying, I'm willing to pay 15, but I expect someone else is willing to pay 20. And then someone else is willing to pay 25. And that's speculative, and don't do that. And then bonds, of course, are simple. Bonds are whatever your current yield is today. Your current yield is what you get, man. No other way around that. Bonds could not be simpler. Your current yield is what you're going to get. There's no ifs, ands, or buts about that. And if you're getting a 2.2% current yield, that's what you're going to get going forward. Even if the market is up 19%, it does not matter on bonds. All right, let's see. All right, so Bob, who says I should just let people suck it up who are single, says the Roth conversion presentations always seem to emphasize married filing jointly. I get this a lot. I don't understand, because I said explicitly I'm going to do case studies on single people. I don't know how else I could have stated that. I'm incredibly clear on that, and I have many a case study of previous episodes. Now, look, I get a bunch of episodes out there, but if you just go to Google or YouTube and you type in Inherited Wealth Planning Roth playlist, you'll see case studies of single people. I got Scott Single. I got what's her name out there, and I got Scott Single, and I got not Mary. I can't remember her name, but anyway, I got a bunch of case studies with single people out there. I'm drawing a blank what her name was, not Janice. But anyway, but I have a bunch of case studies for single people, and I've got more to come. So patience, man, patience. The problem with me is I chase shiny objects. So I see something I want to talk about, and I just talk about it, which puts me back on what I was previously wanting to do. But I get around to doing it all. It just takes time. Seems like, do you have states on your radar for retirement other than Georgia? Virginia, absolutely. I would love to go to Alabama. My wife doesn't want to go there. She just likes Virginia. That's where she's from. That's where most of she has 8 brothers and sisters. They most live up there. One lives in England and one lives in South Carolina. The rest of them live in Virginia. Maybe out west someplace. I don't know if I'd be. We lived in Phoenix. That's where we got married. Phoenix is too hot, but I've always liked the upper part, and I've never been there. And I've talked about South Dakota a couple times, Rapid City, and I don't know. We'll see. At the end of the day, the mountains of North Georgia are freaking awesome. Where my man Fritz lives up there in Blue Ridge. It's freaking awesome. I could easily handle that. It won't be in the Atlanta suburbs. I'll tell you that right now. I just hate the traffic, man. And sitting back and hearing the freaking birds chirp with a cup of coffee, overlooking some woods, man, life is good, man. And you can have that in North Georgia mountains for pretty doggone cheap too. So for me, Virginia, North Georgia, I could handle Huntsville, that's for sure, because you got the Orange Beach right south and Huntsville, the mountains up north. Oh, it's a great state, cheap as can be too. East Texas, always like Tyler, Texas. Rapid City, maybe. Bend, Oregon has always been on my mind, but I need to be able to own firearms, AR-15s. Oh no, YouTube's going to ban me because not that I need an AR-15, because I like them. And it's not a matter of my rights, exercising my rights based on needs. It's a matter of exercising my rights because I'm a free, red-blooded American. And if I want to buy a friggin' AR-15 with a tiny little 223 round, I'm going to buy an AR-15 with a tiny 223 round. The irony of it all is we got to save the kids. Well, you damn well better get rid of friggin' 12-gauge shotguns because they do a whole lot more damage than a friggin' AR-15 does with a tiny 223 round, for the love of me. That's why the Russians still stay with their 7.62 rounds, because they know they'd take somebody out. Or a 5.56, I mean, look, I've never been shot, never went to war, but I mean, a 7.62 is a hell of a lot bigger of a round than a 5.56, which is an AR-15, a 223. And so if you think if you think that little tiny round from an AR-15 is going to do more damage than a friggin' buckshot, yeah, nah, it ain't going to happen. All right, my man Airborne Misfit, going back to Army talk. Wondering about a comment left on mine. What your okay, gotcha. Guy claims my Social Security income will be reduced because my wife is no. Your Social Security income will not be affected by WEP. It'll only be subject. Yours won't be affected by WEP unless you have a government pension where you did not pay into Social Security, unless you did not pay to Social Security. Now, your spouse will be affected by WEP if she's a teacher, using Texas teachers or some in Georgia, some in Virginia. And there's another state I'm missing: Texas, Georgia, Virginia. And I can't, off the top of my head, I can't remember. But anyway, she will be subject to WEP when she takes her own benefit. And like around, I think it's 484 this year. And then she'll have GPO, which potentially she could lose everything for sure of her survivor benefit when it comes to your Social Security. But you don't get reduced unless you are, did not pay. And I think it's 20 years you had to pay to avoid that. So now you're fine. Ben says I'd use a 1.5% to 2% COLA if you're retiring the next 5 to 10 years. Yeah, I got no call on that. None whatsoever. Frank, I just use what the trustees report says. Angela says I'm 49, scheduled to retire December 13th. Right on, man. We'll be starting Roth conversions next year. You got it, Angela. That's large and in charge, man. Good job. JD, if I retire, I'm single and retired 10 years from FRA with 550,000 tax deferred accounts. Not sure actual amount needed to live each year. Should I take at least 10% a year regardless and convert what I can to Roth? Roth starts at 270. I don't get it. Starts at 270. I don't get the starts at 270. I'm not going to make a blind statement on that, my friend. You know who you are, JD Thompson, about should you just take 10,000 regardless, 10% regardless. I don't know, because I don't know the whole situation, if you know what I'm saying. So I would hate to say, I'd hate to say that at the end of the day, you should just do that blindly without knowing the whole thing. I just don't know. What do you think of high dividend stocks versus ETFs? I just like ETFs. Individual stocks, I don't think are worth the risk. I just don't. Love a weekday live. Yeah, right on, Timothy. I like that too. I protect my AR with a 12 gauge. I protect it with this guy right here. Look at him. You try to get he's going to come get you. Look at that. Hey, my name's Pablo, and I'm angry. Pablo says, what do you think about GE lump sum buyouts, man? I'd probably take that for sure, Timothy. Absolutely. Rob, WEP. Okay, Massachusetts too. All right, right on. I'm surprised to hear that, Rob. So Massachusetts also with the WEP as well. So just remember, WEP is windfall elimination provision. I got a video on that windfall elimination provision for sure. And then the GPO is the government pension offset. So if you are a teacher, and again, most teachers are women. So we'll go to the women here. You will be reduced most likely by your windfall elimination provision, which I think is, like I said, 484 this year or next year, something like that. Hey, look at Devin Carroll's YouTube channel. I mean, that guy, he knows it all when it comes to this stuff. But then the GPO, so Rob dies and leaves his Social Security to his spouse. If she is subject to WEP, she'll be subject to GPO, the government pension offset, which means she could lose a lot, if not the whole thing, of the survivor Social Security benefit. So that's for sure. Yeah, Pablo is tougher than any gun, especially when he's puking all over the place because his old daddy gave him all kinds of bacon grease. Not a good guy. All right, so I guess we'll. I just want to work on this, make sure it's working good. I love it. I will be. What I will do is I'm going to start doing 463. Right on. Okay, Rob. I'm going to start doing some. Oh man, I got him doing that. Pablo's dropping bombs, and I was videotaping that only on this channel, my friends. I tell you, having Pablo is he's got the zoomies, and it's it is the funniest thing you've ever seen. He'll just always at night he'll go crazy. He'd be flying around, and then all of a sudden he'll just stop and jump in his dog bed and go night nights. It is having a dog doesn't melt your heart, man. And that, I'm not a depressed kind of guy. I've never been like that. I just have. I'm an emotional guy. I don't get depressed. But I don't know if I were to be like fall into that. I wonder if depressed people should they get dogs, because dogs are just, they make you happy. Yeah, your dog, you can't help it. They make you happy, just how much they love you. And I just wonder if there's been any studies that say, we have, I don't know, depressed people. We gave them, dogs, and now they're not depressed anymore. I would think that'd be interesting to find out, because, this little guy, he's a nugget, but man, American foxhound. That's nuts. We got the dogs across the street here. I don't even know what they are, but they were like this big, like 6 months ago. Now they're like freaking the size of me. It's insane. So Pablo's got no fear. He went over there, and they were just like, they were playing it, batting them around, and Pablo just back into it, batting around. Pablo's like, let's go. I was like, man, Pablo should have been, if he could be an athlete, this guy, the way he turns on a dime, like, man, no one could guard that guy. Imagine, you think freaking, what's his name, Antonio Brown, I don't even know who's, whatever. You know what I'm saying? You do a corner route trying to guard Pablo, he'll fake you out every time. It's nuts. I don't know how they turn so fast on a dime. It's crazy. All right, my friends, there will not be a live stream on Sunday. I'm going to take a couple days off, actually. Just we got some stuff to do around here, around the house. So I'm going to take a couple days off to reinvigorate myself, and so it won't be a live stream on Sunday. But I do plan on doing these on Wednesday at noon Eastern time. Sorry about the itches, because my dog here, and I love it, man. Hey, that's what I was going to say. So my live streams, I'll probably do where we do some screen share stuff with Right Capital, because I love it, dude. I love it. And we start showing some taxes, like my man Rob or Bob, whatever his name was, said about taxation and whatnot. We'll do some of that. And it's fun. And then I'd love to be able to go over that so we can kind of digest stuff, and whatever articles that come to mind too. It's fun to do the screen share. So we'll be doing that. No, I'll do some more videos, Rob. I'm not going to do a live stream, and I'm on Saturday and Sunday. I'm just taking off, and I at least that's what I say. I love this. This is an addiction to me. It's a good one. I enjoy it immensely. So, semi-retired now. We got some stuff to do around the old homestead, if you know what I'm saying. I said, all right, tell them the better half, I'm going to focus on this and not think YouTube, and see how that shakes out. So we'll see you guys next time. Appreciate you hanging in there while I'm doing this. We'll see how it works when I undo this and end meeting. Yeah, right on. Thanks, guys. We'll see y'all.